Good morning, everybody. Hey, welcome to Tuesday. It is October 22nd. This month is flying by. Hope you guys had a great day yesterday as the markets were a little bit mixed. We'll talk about that more when Dave joins us. And also looking at the futures this morning, there is some red ink out there. And we'll talk about that as well as some earnings that have hit the books as we head into this morning. Hey, hope you have a great day. Remember, there are so many things in this world that we have no control over, but you can take control of your investment portfolio by knowing the amount of risk you have and making sure it lines up with the amount of risk you should have based on your current circumstances. That's why I developed the core retirement design. Give us a call at 863-382-0037 to schedule your core retirement analysis. Hey, with that, we got Dave coming up next.
105.7 Light FM. That's REM there. Hey, good morning. It's 8:40 here, 20 before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. Now, keep in mind, this is general information, but it's still dang useful in almost always, right? Welcome to a look at what's happening to your money here this morning, and we've got Phillip Statler on the line from Statler Financial Services to help us out along the way. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well today. The markets were a little bit mixed yesterday, and I will tell you, there's a lot of red ink this morning.
Yeah, we were kind of giggling before we went on the air on the phone. One of my tip sheets said the markets went down yesterday because they're concerned about deficit spending after the election, and we both kind of giggled and said, gosh, what was your first clue, right?
Oh, yeah. Are they just now figuring that out?
How many trillions worth of debt are we in? They finally noticed. Gosh, somebody was wearing rose-colored glasses that were opaque to go along with it. Yeah. It is kind of interesting, though, the reaction you'd mentioned when we were talking before going on. We are evidently selling federal bonds like chiclets because the interest rates are going up, and that just gives me an indication that we got a bad case of fear of missing out on stock market. Red ink yesterday, notwithstanding, they're pouring money into the equities markets like it's going out of style, aren't they?
They are. We've seen interest rate on the 30-year treasury. I know I mentioned yesterday that it was up getting close to 4.5. Well, it's basically there. It's 4.49% right now in the 30-year treasury is the yield. That's pretty substantial. The 10-year, which is what a lot of people look at when they're looking at interest rates, up to 4.19%. So we've got some bigger numbers there that are continue to look like they're increasing at this point.
And absolutely, a reminder to folks that don't pay close attention to this, rising rates and yields in federal bonds means people are selling them, the price is lower then, and that's why the yield ends up going up. And I figure the money's got to go somewhere. Might be into gold because they're still on a run up, but good heavens, we've been talking about the multiples on the Standard & Poor's 500 now for months. The money's going somewhere, and a big chunk of it is going into a very well-priced stock market at the moment.
Well, that's right. It's getting up there, and I mean, you might even say it's getting in nosebleed territory.
Yeah, it absolutely is. I mean, when we start looking at 35 to 1 price earnings ratios on the Standard & Poor's, that's a number I'm used to seeing on NASDAQ instead of on the Standard & Poor's 500. Some of those chickens are going to be coming to roost this week. I read like 20% of the Standard & Poor's 500 going to be reporting this week, and that, I suppose, is probably going to give us some herky-jerky movements this week, wouldn't you expect?
I would suspect so, depending upon obviously which way they end up leaning as far as expectations. But like I said at the beginning of the show, right now we've got a lot of red ink out there.
And it says, and I'm crossing my fingers that doesn't lead. The thing you talk about which way it goes, kind of interesting. So far, it's very, very early in the season, but the market is being incredibly kind to issues that are actually beating their quarter numbers. Normally, you end up seeing a one-day change in a stock. up when it beats the street by about 1.49%. This year, so far, and again, it's very early in earnings season, if your company manages to beat the street, you end up seeing like a 3% increase in your stock price. Now, that having been said, some of the issues we've heard that have missed have been taking like 7% dumps. So we're just not being charitable one way or the other, are we?
No, we really aren't. And we're talking about interest rates. I just saw Paul Tudor Jones on CNBC, and he's talking about his estimation of the debt to the GDP, and he thinks it's going to be like 200%. That is double basically what it is right now.
I remember alarm horns sounding when it was hitting like 90% of GDP, and we just slammed right past like it was a speed zone sign at Indianapolis.
Yeah, and I think I've seen somewhere, and don't hold me to this one now, but I've seen some different charts that give some estimations as to, GDP to the national debt. And at some point, it triggers a massive sell-off. And I'm watching Tudor talk, not actually hearing what he's saying, but he's obviously chatting that part up right now, probably.
Well, the rules of thumb, that they may be changing radically, but they haven't. Number is somebody's got it programmed into their computer on one of the big sellers, and your point's well taken. But I mean, the bottom line is when you owe more than you've got, there's a term for that. We call it bankrupt.
Yeah.
It's just simply put, we're bankrupt, people. It's refinance time. Talking about other chinks in the economy, and boy, we're just full of merry sunshine this morning. Leading indicators came out yesterday late morning, and this is just one more reason to kind of make you look at these price earnings ratios and saying, ruh-roh. They actually declined a little bit more than folks expected them to, didn't they?
They did. The expectation was for them to fall another 0.3% like they did last month, but they actually fell 0.5%. So that's not as that's not quite living up to the expectation.
Man, it doesn't increase optimism as far as earnings are concerned as well. It was down yesterday. I didn't quantify it for us, so I'll start out with that before we get to the earnings of the day. Dow was off by 344 points yesterday. That's measurable. That's 0.8% in one day. Standard & Poor's was off by only about 10.5, but that's still 0.18%. NASDAQ was actually up about 0.25%, up about 50.5 yesterday. And now we get into really a meaty earnings season week. And one of the big ones, I remember back in the 50s, the phrase was, what's good for General Motors is good for America. Was it good for America on their report?
Hey, General Motors had a very good report, Dave. They beat substantially. They came in at $2.96 a share of earnings. They were only expected to make about $2.43. They also beat on revenue by a little over $4 billion. Nothing to sneeze at there. And they also, one more big jump for them, they raised their full year outlook. So they're firing on all cylinders. Now, when the news came out, they did fall slightly, but now they've turned that around, up 1.1% this morning before we get trading.
That's cool. And given all the travails GM's gone through and the auto industry in general with their concerns over losing their shirts on electric vehicles, it's good to see a company actually doing better than expected off of the things they've been told to do with the government and not necessarily selling any of them, right?
Yeah, they have. They've bounced back, and I'm hoping maybe that's going to shed some light to the other automakers as well.
Absolutely. A company that has a local operation here also reported how did Nucor Steel do?
Well, Nucor, they had the third quarter, their earnings and revenue beat expectations. However, they did say that their GAAP earnings, that's their generally accepted accounting principles earnings, which is not usually what they usually report to you and I, their adjusted earnings, not their accounting earnings, but they expect that the current quarter is going to decline versus the previous quarter. And so that's got Nucor trading down almost 3% this morning.
Did they happen to say why they expected a downtick? I mean, they are a recycler too, so.
They did not. I'm not sure what's causing that, the issues there. We've got another bank reported.
Mm-hmm.
Zion's Bank Corporation out of Utah, they had stronger than expected earnings this morning. They came in about 20 cents ahead of expectations at $1.37. Revenue was up quite a bit compared to where they were supposed to be. Net interest margins rose year over year, which that's always a good sign. They're up 3.1% this morning. Um, Another one that's really a household name for most of us, and that's 3M. Post-it
Mm-hmm.
notes and Scotch tape and that kind of stuff. They had a good quarter. They beat by 8 cents a share, came in at $1.98. Revenue was just a tad above expectations this morning. They're trading up 5.1%.
Google. I don't own any of them, but I've had some family members that work for 3M, so I'm always kind of cheering for them.
Yeah, so that's some good news for them. I was looking to see what else. Oh, Sherman-Williams. We talk about them whenever they report. Sherman-Williams had a disappointing third quarter, Dave. They earnings were off. They made $3.37 a share versus $3.55 expected. They
Ooh.
missed on revenue as well. They've got Sherman-Williams down almost 5.2% this morning.
Hmm. That's got to be a byproduct of the home improvement not crash, but at the very least downtick.
Yeah, we've been talking about, remember, Red Lobster filed bankruptcy earlier this
Mm-hmm.
year. We got a new one on the verge of filing for Chapter 11 bankruptcy as well in the restaurant industry. TGI Fridays is expected to
Oh
file
Lord.
sometime this week. I was reading an article and there was like, I don't know, 10, 15 restaurants that have filed bankruptcy this year. Maybe not the restaurant itself or the franchise itself, but some of the major franchisees have filed for bankruptcy as well.
And that really surprised, especially in that particular class of midline restaurant. I would expect them to be doing better during an iffy economic time. That family, the TGI Fridays, the Chili's, what do we have over here next to Publix?
It's
Can't remember. We're both
uh,
searching for
yeah,
it,
we
but
just went
that
lost.
class of restaurant, the kind of yuppie, I used to call them yuppie bars, but they've always been fairly solid. But evidently, that they're getting sandwiched in terms of marketing position between the high end and the low end these days, I guess.
Well, and I think now the middle class folks that used to could afford to eat there, their prices have gone up, and inflation has made it where it's become pricey, and people just aren't eating out as much. They can't afford it.
Valid point. Valid point. Resetting the table, it was an off day yesterday on Wall Street. The reasons sometimes cause a giggle, but nevertheless it was red. How are we doing 45 minutes early today?
So we got a lot of red ink. We got the Dow Jones Industrial 30 right now. The futures are down $155. That's a little over 1/3%. The S&P 500 is down $31. That's a little over 0.5%. The Nasdaq 100 is down almost $152, which is down 0.75%. And the Russell 2000 down almost $16. It's down 0.7%. On the other side of the coin, the commodities side, we've got silver up another almost 1.7%, Dave. $34.64 an ounce. Gold's up 0.4. Crude oil back up over 70, up 1.1% to $70.85 a barrel.
The silver is really knocking my socks off. Somebody needs to check the Hunt Brothers checkbooks or something, right?
Yeah, I see what's happening there.
Them boys at it again. Overseas market, if you're old enough, you remember the Hunt Brothers guys. Overseas markets, it was a bad day in the Asian Rim. Chinese mainland markets were up. Everybody else fell like a rock. Japan was down by like 1.4%. Australian markets were down by 1.6%. Mainland Chinese markets weren't up enough to offset all of that. They were up about 0.5%. Over in the European community, it's been a modest red day so far, halfway through their trading day. Everybody's red, but about 0.5% halfway through the day over there in the European community. Getting my retirement plans together gets more urgent the older I get, Phillip. Do it early before you get old and have to really get strutting it. How do I find you to get that plan going?
Absolutely, Dave. You need to have a plan, whether you've already retired or you're getting ready to retire. A plan is vitally important. And that's why I've developed the core retirement design to help people design that retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend, as always, for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. at 95.3 FM.
And you and me back again tomorrow, same time on Light with an up-to-the-minute report. I appreciate it, sir, and I'll see you then.
All right, have a great day, Dave.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope you have a great day. I hope you'll join us again tomorrow, same time, same place. Until then, have a great one. We'll talk to you again later. Bye now.